Hello everyone, welcome to the market opening bell for Friday, February 6, your 10-minute guide to the stock market. Chinese President Xi Jinping held a phone call with US President Trump. Trump posted on his Truth Social platform that the call was very positive throughout, describing the bilateral relationship as extremely good, with both sides recognizing the importance of maintaining it. Trump stated that China will consider increasing U.S. soybean purchases from the original 12 million tons to 20 million tons this quarter. In addition to soybeans, the two sides also discussed issues such as Iran, the Russia-Ukraine conflict, Taiwan, aircraft engines, and oil and gas cooperation. Southbound funds saw continued net inflows in the afternoon, while Hong Kong stocks fell early on Thursday before rebounding. The Hang Seng Index opened down 219 points, dipped as much as 436 points to a low of 26,410 points in the morning session, then turned positive in the afternoon, rising as much as 72 points to a high of 26,919 points. It closed up 37 points or 0.14% at 26,885 points. The Hang Seng China Enterprises Index rose 44 points or 0.5% to close at 9,093 points. The Hang Seng Tech Index gained 39 points or 0.7% to close at 5,406 points. Total market turnover was 315.1 billion Hong Kong dollars for the day. Southbound trading totaled $113.4 billion, with net southbound inflows of $24.977 billion, marking the highest level since August 15th last year. Among them, net buys included Tracker Fund, $4.576 billion, Tencent, $5.578 billion, Alibaba, $1.553 billion, China Life, $1.239 billion, Hang Seng China Enterprises Index ETF, 987 million, CSOP Hang Seng Tech Index ETF, 845 million, China Mobile, 564 million, Meituan, 540 million, Xiaomi, 500 million, PopMart, 391 million, Oriental Selection, 120 million. Net sales included YOFC, 456 million, Hua Hong Semiconductor, 362 million, SMIC, 308 million. Statistics show Southbound funds have net bought Xiaomi for 6 consecutive days, totaling 3.43 billion. Tencent for 4 consecutive days, totaling 11.068 billion. China Mobile for 3 consecutive days, totaling 1.322 billion. Meituan for 3 consecutive days, totaling 1.185 billion. While net selling SMIC for 9 consecutive days, totaling 3.981 billion. Technically, the Hang Seng Index reclaimed the 26,500 level, but closed still below the 10-day moving average at 27,116 points and 20-day moving average at 26,894 points. The Hong Kong dollar exchange rate fell to its lowest level since August last year at 7.811 against the US dollar, due to excessively abundant liquidity in the banking system, stimulating arbitrage trades, borrowing Hong Kong dollars at low cost to invest in higher yielding US dollars. The 1-month Hong Kong interbank offered rate HIBOR has dropped to its lowest since November last year and is expected to decline for a 5th consecutive month. At the same time, southbound inflows are not as strong as last year, and seasonal demand stimulus is not obvious, so banks are more willing to provide liquidity, making Hong Kong dollar arbitrage more active. It cannot be ruled out that the Hong Kong dollar may weaken further, but it is expected to find some support around 7.82 against the US dollar. The 3 major A-share indexes opened down 0.7% to 1%, with declines widening before narrowing slightly in the afternoon. The Shanghai Composite Index fell 26 points or 0.6% to close at 4,075 points. The Sunshine Component Index dropped 203 points or 1.4% to 13,952 points. The Chinese index fell 51 points or 1.6% to 3,260 points. Total turnover in Shanghai and Shanshan markets was 2.177 trillion yuan. The central parity rate of the renminbi against the US dollar was lowered by 37 points to 6.957 per US dollar. Baidu rose 2.7%. The company announced that the board has approved a new $5 billion share repurchase program and a dividend policy to further enhance shareholder returns. The board expects to announce the first dividend in 2 to 6. The new share repurchase program allows repurchase of up to $5 billion in company shares, effective until December 31st, 2028. The board will periodically review the repurchase program and may adjust its terms and scale as appropriate. Meituan announced the acquisition of all issue shares of Dingdong Flash Holding Limited, a subsidiary of Dingdong Meituan, for an initial consideration of $717 million. The target company's main business is e-commerce in fresh food and groceries. Meituan stated that the group attaches great importance to the food and grocery retail business, and this transaction aligns with the company's long-term development plan in this area. As of September 2025, Dingdong operated over 1,000 front warehouses in China, with monthly active buyers exceeding 7 million. The European Commission, under the Foreign Subsidies Regulation, formally launched an in-depth investigation into Chinese wind power complete equipment manufacturer Goldwind Science and Technology. Goldwind stated that its various businesses in the EU market are operating normally and in an orderly manner, but its share price still fell 4.6%. The investigation focuses on whether government subsidies distorting market competition were received in its sales of wind turbine units and related services in Europe. This review, which began in April 2024, is expected to continue until the fall of 2027. On the surface, it's a compliance review of a single company, but in reality, it's the EU using a new regulatory tool to systematically protect its clean energy industry chain. The China Photovoltaic Industry Association released a forecast at yesterday's Industry Development Seminar, expecting China's new photovoltaic installed capacity this year to reach 180 to 240 gigawatt. Compared to last year's record high of 315 gigawatt, this represents a year-on-year decline of 23.8% to 42.9%, based on the comprehensive assessment of current policy support, industry chain capacity, and market demand. During the 15th five-year plan period, annual average new installed capacity is expected to be 238 to 287 gigawatt, continuing high growth momentum. Key drivers include advancement of dual carbon goals, acceleration of large-scale base construction, sustained penetration of distributed photovoltaics, and optimization of electricity pricing mechanisms. Additionally, there are market rumors that teams from Elon Musk's SpaceX and others recently visited several Chinese photovoltaic companies, possibly for developing space-based photovoltaic deployment. According to China Photovoltaic Industry Association's analysis, in practical applications, gallium arsenide cells remain the mainstream choice for current commercial aerospace and space stations due to their high conversion efficiency and excellent radiation resistance. Although costly, they have undergone long-term on-orbit validation with high reliability. In contrast, heterojunction HJT perovskite technology hyped in capital markets is largely based on cost reduction logic proposed by individual financial institutions. Actual products are still in the laboratory or early validation stage, far from large-scale commercialization. NIL issued a profit alert expecting adjusted operating profits for the fourth quarter of 2025 to range from 700 million yuan to 1.2 billion yuan, marking the company's first quarterly adjusted operating profit. This compares to an adjusted operating loss of 5.5436 billion yuan in the same period last year, mainly due to continued sales growth during the quarter, favorable product mix driving improved vehicle gross margins, and ongoing comprehensive cost reduction and efficiency enhancement measures. Today, 3 new stocks will be listed for trading. The world's largest pig farming company, Meituan Foods 2714, closed at $41 in the grey market on Philip Mart yesterday, up 5.1% or $2 from the listing price. Excluding fees with 100 shares per lot, paper profit of $200. Private medical services provider Distinct Health 2677 closed at $88.8 in the grey market, up 48.2% or $28.9 from the listing price. Excluding fees with 50 shares per lot, paper profit of $1.445. PCB dedicated equipment manufacturer Hang Seng 3200 closed at $118.2 in the grey market, up 23.4% or $22.4 from the listing price. Excluding fees with 100 shares per lot, paper profit of $2,240. Hong Kong EX announced that in January this year, there were 13 new listed companies, up 63% year-on-year. IPO fundraising amounted to $39.3 billion, up 5.55 times year-on-year. Total fundraising was $53.1 billion, up 3.18 times year-on-year. For securities markets, total market capitalization at the end of January was 50.8 trillion Hong Kong dollars, up 44% year-on-year. Average daily turnover in January was $272.3 billion, up 89%. Average daily turnover of derivative warrants was $7.8 billion, up 77%. Average daily turnover of exchange-traded funds was $35.9 billion, up 69%. US stocks opened low and closed lower with continued selling pressure on tech stocks. The fear index VIX rose 3.13 points or 16.8% to 21.77 points. The Dow Jones fell 592 points or 1.2% to close at 48,908 points. The Nasdaq fell 363 points or 1.6% to 22,540 points. The S&P 500 fell 84 points or 1.2% to 6,798 points. The Nasdaq China Golden Dragon Index, reflecting Chinese concept stocks, rose 67 points or 0.9% to close at 7,528 points. Heavyweight tech stocks continued weak. Amazon fell 4.4%. After hours, the company reported fourth quarter revenue of $213.4 billion, above the previous estimate of $211.3 billion. AWS revenue grew 24% year-on-year to $35.58 billion, above the expected $34.93 billion. Advertising revenue rose 22% to $21.32 billion, above the expected $21.16 billion. Net profit rose 6% year-on-year to $21.2 billion, with earnings per share of $1.95, below the expected $1.97. After hours, share price fell nearly 9%. Amazon said it is actively investing in data centers and other infrastructure to meet surging AI demand, raising its full-year capital expenditure expectation to $200 billion, far above the market's expected $146.6 billion. Alphabet reported a 30% profit increase last quarter, beating expectations, but guided for double capital expenditure this year. The share price once fell 8% before recovering, closing down only 0.6%. Qualcomm beat expectations on last fiscal quarter results, but provided weaker guidance, falling 8.5%. Microsoft fell 5%, Tesla fell 2.2%, Nvidia fell 1.3%, Apple dipped 0.2%. Bitcoin prices plunged further, dropping more than 15% at one point to below $62,300. Cryptocurrency stocks followed suit. MicroStrategy plunged 17%, Coinbase fell 13%. Market asset selling intensified, with precious metals prices tumbling. Spot silver fell sharply, 16% to $73.8 per ounce. Spot gold dropped 3% to $4,817.7 per ounce. The U.S. Department of Labor reported that initial jobless claims, seasonally adjusted, rose by 22,000 to 231,000 for the week ending January 31st, above the market expectations of 212,000, possibly affected by blizzards in much of the country, but the labor market remains stable overall. According to Challenger Gray and Christmas, U.S. employers announced layoffs surging 205% in January to 108,435 due to lost business contracts and economic uncertainty, the highest for any January since 2009. Announced layoffs were 118% higher than January 2025. The increase was mainly driven by 31,243 cuts in the transportation sector related to United Parcel Service. The tech sector announced 22,291 layoffs, most from Amazon, which plans to cut 16,000 corporate employees. Our stock pick today is New Oriental, stock code 9901. New Oriental recently announced its financial results for the second quarter of fiscal year 2026, ending November 30th, 2025. During the period, net revenue increased by 14.7% year-over-year to $1.191 billion. Among the segments, overseas exam preparation business revenue grew by about 4.1% year-over-year. Domestic exam preparation business for adults and university students recorded approximately 12.8% year-over-year growth. The new education business achieved an impressive 21.6% year-over-year growth. The company's non-academic tutoring courses are now offered in approximately 60 cities, attracting about 1,058,000 student enrollments during the quarter. Meanwhile, its intelligent learning systems and devices have been deployed in about 60 cities, with active paying users reaching approximately 352,000. For the second fiscal quarter, operating profit surged 244.4% year-over-year to $66.3 million, with an operating margin of 5.6%, up 370 basis points from the same period last year. Non-GAAP operating profit rose 206.9% to $89.13 million, with a non-GAAP operating margin of 7.5%, up 470 basis points year-over-year. Net profit attributable to shareholders was $45.5 million, up 42.3%. In October 2025, the company announced under its previously approved 3-year shareholder return plan that the board had approved an ordinary cash dividend of 12 US cents per ordinary share, equivalent to $1.2 US per ADS, to be paid in 2 installments as part of the 2026 financial year shareholder returns. The first installment has been fully distributed to ordinary shareholders, and details for the second installment will be announced in due course. Additionally, as part of the 2026 financial year shareholder return plan, the company announced a share repurchase program in October 2025, authorizing up to $300 million in repurchase of American depository shares or ordinary shares over the next 12 months. As of January 27, 2026, the company had repurchased approximately 1.6 million ADS from the open market for a total consideration of about $86.3 million. While prudently expanding capacity, the company has precisely balanced revenue growth with operational efficiency, simultaneously upgrading its OMO, online merging offline teaching system, and continuing to invest in the integration of artificial intelligence technology with its education ecosystem. The company remains committed to deeply incorporating AI into existing educational products, continuously optimizing the new batch of AI-driven teaching tools, and expanding AI applications to improve operational efficiency and strengthen support systems for teaching teams and employees. Recommendation: buy at $47.50, target $53, stop loss at $45.50. I do not hold the above stock.